hundreds of year old brands. How do you balance it, and where do you think tastes are moving to right now? Is it toward more niche brands?
People like to have a repertoire of brands. They really like big blockbuster, strong, high quality, strong heritage brands, while at the same time, sometimes having a local alternative or a niche brand. And the good thing about Pernod Ricard is we have both. We have strong international strategic brands, and we also have what we call specialty brands. So we really have both.
What's going on with Absolut? Or is vodka no longer in vogue?
Well, vodka in the U.S. is the second largest spirit segment behind whiskey. So it's just struggling a little bit in the U.S. And competition is quite tough. But outside the U.S., vodka is very strong. Talk about China. Absolut in China grew more than 30%. Absolut in India grew more than 30%. And Absolut grew very nicely in Western Europe. So it's just in the U.S. where right now tequila, cognac, and whiskey is probably more dynamic than vodka.
It's interesting. I mean, I've heard this from Diageo too. The U.S. trends are not necessarily the global trends in terms of people's preferences. Like, I know gin is exploding in Europe right now. I'm not sure how hot it is in the U.S.
You're absolutely correct. And the good news is if you have a wide portfolio of brands covering basically all categories, such as we do, you have cycles a little bit everywhere. And right now in the U.S., it's good to have brands like Jameson Irish whiskey, such as the Glenlivet single malt, or such as tequila, which is quite hot with Avión and Altos. But Absolut in France, for instance, is one of the fastest growing brands there.
And finally, how would you characterize sort of consumer behavior worldwide? I mean, would you say it is strong?
Yeah, number one is strong, but with a strong desire for brands, high quality brands. I think premiumization, clearly led by the U.S. basically, people trading up to higher quality marks in the U.S. is very strong, and globally as well. And healthiness and well-being, a very strong trend. People probably wanting to drink a little bit less, but much better. That's the value play.
Really quickly on the fiscal 20-year profit outlook, some people are wondering on the street whether you were just being conservative, as you traditionally are, or whether really we are facing a pretty uncertain outlook in terms of the macro environment.
Well, as a matter of fact, every year we say the outlook is uncertain, in terms of the environment. This year we changed and said the environment was particularly uncertain. I think that the degree of uncertainty has nudged up a bit. And as I watch TV, that's the way I feel the tonality. So that's a realistic guidance based on the current.
Very central banker thing of you to put in that particularly word as a code.
Alexander, thank you.
Pleasure. Thank you very much.
Pernod Ricard's chairman and CEO.
When we come back, much more on today's big rally. Dow's up 467 points. Stocks hitting their highest level in more than a month. It's Buck on the Street. We'll be right back.
Tell them we're flexible.
Don't worry. My Dutch is okay.
Just okay?
LinkedIn Learning offers more than 14,000 online courses to help you achieve your goals. Its short video tutorials cover business, technology, and creative skills employers look for at every level, all taught by real-world industry experts. And new courses are added every week. Plus, LinkedIn Learning is personalized, recommending courses based on your interests and skills. Start your free trial at linkedinlearning.com. Cancel within the first month to avoid any charges.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA and ATOL protected, subject to availability and conditions.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Nason and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Despite today's rally, long-term yields still at historic lows. Investors looking at the Fed for rate cuts to stimulate growth. But can the government help if recession does hit? Well, yes, says former CBO director in a new Washington Post op-ed writing, we have plenty of capacity in the federal budget to undertake vigorous counter-cyclical tax and spending policies when the next recession arrives. Joining us now is Douglas Elmendorf, the author of the piece, also Harvard Kennedy School Dean, former CBO director. So why did you write this piece right now?
I think it's important for people to understand what good economic analysis says about our policy options. Good analysis says, yes, we have very high government debt, and we'll have to do something about that at some point. But at the same time, if we hit a recession, we can shorten that recession, we can make it less severe by using fiscal policy, and we should do that.
What type of fiscal stimulus do you have in mind?
A combination of government spending increases and tax cuts can make sense. We used a particular combination in 2009. If we'd done more in that recession, it would have been shorter. More people would have kept their jobs or found jobs more quickly. We should do some combination of tax cuts and spending increases when we hit the next recession.
Doug, I suppose that you could talk about how the math works pretty well in terms of the government's borrowing capacity. Some are arguing the government's borrowing capacity does not really have an effective limit. On the other hand, there are the political realities, and people like to throw out numbers like $22 trillion in gross national debt as if that is an impediment. So is your message here that politicians should think differently about the debt burden and how the government services it?
Yes, I think that's right. There's a conventional wisdom that I've seen emerging in newspaper op-ed pieces and in analytic stories, a conventional wisdom that I think is not supported by the good economic analysis. So I want to bring the analysis to the forefront, and it has two numbers I think that are very important. One is the amount of debt outstanding. The other is, as you've just been reporting, interest rates are very low. People are quite eager to lend money to the federal government. And that changes the context of making decisions about fiscal policy. It doesn't change the fact that we ultimately will need to keep debt from just rising and rising as it is now. But it says that the urgency of addressing that problem is less than many of us, including I, had expected several years ago. That gives us a little more room, including room to fight recessions. And recessions are very costly for people's lives. We ought to fight them with whatever tools we have. And fiscal policy is one of those tools today.
Well, to your point, nobody seems particularly focused on deficits to begin with. I mean, we're running trillion-dollar deficits as it is.
That's right. And in fact, as I note in this piece that I wrote, a very substantial anti-recessionary policy would only cost about as much as our current annual borrowing. So that's not a good commentary about our current annual borrowing. But the wrong time to start worrying about federal deficits and debt is when we hit a recession. The right time to think about it is when times are good. But when times go bad, then we ought to use the fiscal tools that we have. And I worry in the things that I've been reading that people will then stand up and say, oh no, we have to worry about our fiscal problems. That's exactly the wrong timing.
What about the stimulus that was passed from the Trump administration in the form of mainly corporate tax cuts, but also overall tax cuts? How beneficial do you think that was for the economy, and was it worth piling on the debt?
Well, those tax cuts created a short-term economic boost. We saw that in the pattern of GDP numbers. GDP grew more quickly for a while, and now that boost has passed, and GDP growth is settling back down again. I think the mistake in the tax cuts was the way those funds were used. Most of the money, as you've just hinted, went to people who have been doing quite well economically over the last few decades, people toward the top of the income distribution. If we're going to cut taxes, we should cut the tax burden on people who are not in the top 1% or the top 20% and have had a harder time with globalization and technological change and so on. So the tax cuts went the wrong direction across the income distribution in terms of whose burden we should have been focused on reducing. But also, that was just tax cuts. It didn't address the need for infrastructure investments and other things that we actually need government to do in this country. So the big problem with those tax cuts was not the debt. It was the uses to which the money was put.
Right. So what is the best usage then? Let's assume, I mean, for example, people are concerned that the Fed is going to get so low in rates as it is that really they're not going to be in a position to necessarily help us if and when we actually move into the next recession. What would be the most effective form of government spending to do what you're talking about, Doug?
I think the government can spend money on infrastructure. It can provide support to state governments whose budgets get very, very badly hit in recessions. And it can give money back to individuals, to families, to spend on their private needs. I think a combination makes good sense economically because you're hedging your bets a bit about which particular use of the money will have the biggest stimulative effect. Economists can't be sure about that. I have my own preferences. I think, in fact, we would benefit in this country from a somewhat larger federal spending on core public services. But that's different from the anti-recessionary argument. The anti-recessionary argument is just that we should do some combination of spending increases and tax cuts. I'll have my preferences. Other people have their preferences. The point I want to emphasize now is that we should do something. We should agree on some combination of policies that will widen deficits, lead to more government borrowing now, but can have a very positive effect on the economy in the short term and for a number of years to follow.
Well, both parties seem to agree with you at the moment. Doug, thanks for joining us on your piece.
Happy to talk with you. Thank you.
Getting a check on shares of Signet Jewelers, an earnings winner, surging, beating on both the top and bottom lines. On the same-store sales front, CEO Jenna Drosos did tell me while our same-store sales same-store sales were down 1.5% this quarter, we did come in ahead of our guidance, and that was key for the market as well. E-commerce sales were a bright spot, up 4.4%. She says we also saw positive comp sales growth from our Zales and Piercing Pagoda banners, two of their lines, which saw its fifth consecutive double-digit increase. Shares of Signet still down, guys, more than 70% for the entire year. This has been a tough and painful story. Expectations had just gotten so low that the market was looking for down 3 on comp store sales growth. So any glimmer of hope which was seen is going to be key. The other key here for Signet is the fourth quarter. I mean, that's where they make all of their earnings per share for the year. So that's going to be interesting to hear the outlook. But for now, they're getting the benefit of the doubt, perhaps a short squeeze.
Yeah, without a doubt. I mean, I think it's still a very heavily shorted stock. It's right in the crosshairs of exposure to malls, declining category, and there was obviously a lot of momentum to the downside. So the shorts are there. But by the way, reaffirming this outlook for this year, more than around $3 a share in earnings.
Yeah,
it's less than 5 times earnings. It's like GameStop cheap in terms of companies that were now valued for, continued decline. So that's where you see the violence of this stock.
They also extended some debt maturity, so people think that was a positive, that they refinanced there. Yeah, I mean, they're dealing with two major headwinds, which is consumer preferences. Bridal, for instance, has been pretty weak. And also the mall. I mean, they are heavily exposed, and they have been closing stores. And until we see either a return in mall traffic or they can right-size their business, analysts, including Citigroup, I'm reading right now, says it's going to be a sort of bumpy outlook.
All right, let's get over to Sue Herrera now and get a CNBC News update at this hour. Sue.
Morning, David. Good morning, everyone. Here's what's happening at this hour. Hurricane Dorian zeroing in on the Carolina coast. It struck Charleston overnight as a Category 3 storm with winds up to 115 miles per hour and heavy rainfall. KNBC meteorologist David Bigger has the latest forecast for Dorian. Good morning, David.
Path looks like it's still starting its northeasterly turn off the Carolina coastline, and it will continue to move along the coastline very slowly as we go through the next couple of hours into the next day or so. But keep in mind the winds extend outside of this cone of concern, so we will be looking at some windy conditions along much of the Carolinas, as well as some life-threatening storm surge and very heavy rainfall over the next couple of hours, which could cause some flash flooding. Sue?
Thank you so much, David. Meantime, British Prime Minister Boris Johnson welcoming Vice President Mike Pence to 10 Downing Street. Pence's visit follows a trip to Iceland and also Ireland earlier this week. Pence calling on the EU to negotiate in good faith with Britain on Brexit. And Britain's Princess Charlotte starting her first day of school. She arrived at Thomas Battersea in South London this morning, accompanied by her parents, Prince William and Kate, and of course, her big brother, Prince George, who also goes there. And apparently they got a sibling discount. That's the buzz. That's the news update this hour. Mike, I'll send it back downtown to you.
Wow. Guess you wouldn't refuse it even if you didn't need it. Thank you, Sue.
There you go.
Appreciate it. When we return, Royal Caribbean CEO Richard Fain will join us to discuss Hurricane Dorian's impact on the travel industry, their relief efforts, and much more. Squawk in the Street. We'll be right back. Don't go away.
WeatherTech is known for providing the ultimate protection for your vehicle.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Hurricane Dorian re-strengthening into a Category 3 storm and threatening landfall in the Carolinas. This after pummeling and leaving a path of destruction through the Bahamas. Many companies already mobilizing to offer help and recovery assistance. Royal Caribbean, which has a private island in the Bahamas called Coco Cay, says it will send relief supplies on their cruise ships, tweeting yesterday that it will deliver more than 43,000 water bottles, 10,000 meals, generators, and supplies. Joining us now from Miami, Royal Caribbean CEO Richard Fain, and joining us on set, our own Seema Modi. Seema.
Mike, thank you. And Richard, thank you for making time. I know it's been a hectic couple of days as your team puts together these contingency plans. Hurricanes are unfortunately a disruption that the cruise industry has to deal with on a reoccurring basis. We've seen the devastating footage, Richard, of the Bahamas, significant damage to the power plants, airport, the marina. What's been the impact on your operations and your private island, Coco Cay?
Well, fortunately, the direct impact on us is very small. There's damage to the island, but we expect it to be back in operation by Saturday. The real issue is the horrific damage in the Bahamas, particularly at the Abacos and in Grand Bahama Island.
But you have had to cancel a number of cruises, but given your large footprint, you've also been able to revise a number of your cruise itineraries to other parts of the Caribbean and Mexico. I guess the question is, how do you think this specific hurricane will impact the desire by travelers to cruise, given the attraction of the Bahamas and the damage we're seeing on the ground there?
Well, one of the things, as you say, we are used to this. We have contingency plans. Our people have been working around the clock over the last week, really to reorganize, to go to different places, to be as accommodating as possible for this. Actually, in terms of disrupting our cruises, it really doesn't happen as often as people think. But we're prepared for it, and we reposition. In terms of people's long-term perspective, we tend, and we've been through this before, we tend to see a few days of concern, but then people look at the history and see, no, overall, there's not much disruption generally. And so I think people just look at the area, and if the history is any guide, and so far early bookings indicate it quickly recovers and we're back to normal within a few days.
But you think travelers will still want to go there, given the damage we're seeing on the ground in the Bahamas?
Oh, yeah. One of the things that we've seen this, I guess I've got this question a couple of times in my 30 years at Royal Caribbean. And yes, the damage just tends to be isolated. We tend to see the pictures of the very most disrupted areas, and that's not where our guests go. And fortunately, the people of the Caribbean are resilient. The Bahamians have made it very clear to us they intend to make the investment, they intend to put in the effort, and they want to be open for business and right away, and we intend to support that. From a cruise line point of view, only the one island really suffered much damage, and so we'll avoid that for a short period of time. But overall, the Caribbean area is mostly untouched, and demand remains, fortunately, knock on wood, very high.
From a technology point of view, is there an opportunity here to upgrade your fleet? Because the average cruise ship can travel about 22 knots an hour, which is twice the speed of a hurricane. Still, is there an opportunity to make these ships even faster to ensure that they can get around these storms as they emerge?
Well, fortunately, we could go half our speed and avoid most of these storms. And one of the things that I think we should all be very proud of is the work that NOAA, the National Hurricane Center, and others are doing to predict these storms. So the one thing, of many things we have to worry about, avoiding the storm in our ships isn't really one of them. We have enough advance notice, enough speed, and enough technology on the ship to get around the storms with ease. The real problem is, how do we harden the facilities in these countries so that we don't see the kind of devastation? And
lastly, you put about I want to just get to, you put $1 million towards these relief efforts. What else is your team ready to do to ensure that this recovery in the Bahamas is expedited?
Well, actually, as we speak, we are delivering the first of what will be 20,000 meals a day to the people in Grand Bahamas, which has been just, it's really horrible to see what's happened there. It's just devastating. And so the ability to give a little warmth, a little warm food, a little comfort is a small addition that we can make to help our friends there. So our people worked all night on the ships. We're diverting ships from other areas. We're diverting 6 different ships to bring in relief supplies. We've had a tremendous outpouring of volunteers from within the company to go there and help to make the meals, to distribute the meals. And so we'll be distributing about 20,000 a day. We're also bringing water, canned goods. Even toilet paper becomes an issue. It's really awful to see what's happened there.
Certainly is. Well, Richard, we appreciate you making time again today. Richard Fain, CEO of Royal Caribbean.
Thanks, Seema.
Thanks.
Craig, take a look at shares of Slack getting crushed after reporting its first quarterly results since going public. The company beating expectations but forecasting a larger than expected loss for the current quarter. The stock down double digits, just above that price it went public at 26. Squawk on the Street. We'll be right back. Don't go away.
Johnson & Johnson is a baby company.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA net or protected, subject to availability and conditions.
There is one chart showing cracks in the job market, and it could mean trouble ahead for the broader economy. Find out more on tradingnation.cnbc.com. More Squawk on the Street is coming up.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings. Strings and things, strings and things, strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
As many as a dozen partners at Goldman Sachs could be leaving by the end of this year. Wilfred Frost joins us on set for more on a story we've been talking a bit about this morning, of course, Will, sort of the thinning of the partner ranks.
Yeah, exactly. So the first question, David, is why now? And there's two reasons for that. First, David Solomon made some big top-level changes a year ago. He's had some time to think, and he's now making some more a level or two below that. Second, the typical yearly cycle is being increased and brought forward ahead of Goldman's big review and strategy announcement, which is due around early January. I get the sense that it meant the company and the individuals needed to think, this is right for us for 3 to 5 years, not just this still works for us now. More broadly, there was a sense emerging towards the end of Lloyd Blankfein's tenure that people were getting paid based on when the firm did well, rather than based on individual P&L, and David Solomon wants to change that. Don't forget, he and his deputy, John Waldron, came from Bear Stearns originally, the ultimate eat-what-you-kill culture investment bank. And a big part of his changes is to make partner a more aspirational title to get. And here's where we stand on what it means, by the way, to be a partner today, according to sources at the bank. You're guaranteed a $1 million base salary. You almost always get at least a $1 million bonus. Most make $3 million or more in total. Some make a lot more than that. There's also a chance to invest in internal deals and funds. And there's now more regular internal partner meetings and access to Solomon. including, by the way, a partners lunch taking place today just across the road. Currently, there are about 450 partners. That's down from a peak of over 500. It will tick down a little bit further from here over the coming years, though, not the coming weeks. It should stay above 400. Now, this is being framed by some as Goldman leaving the classic Wall Street business models or the classic glory days. I actually think it's Solomon trying to give himself the flexibility and headroom to be able to return to it and pay people well, but only when they really earn it. And he just needs a bit more flexibility and less guaranteed pay to do that.
So they're actually looking at and returns on invested capital for their employees in a sense.
Yeah, which is typically what some of the investment banks used to do. So even if the headline of the bank wasn't that good, if your little department did super well, you'd get paid. I think as the bank swelled and under Lloyd Blankfein's extended tenure and a lot of his deputies extended tenure, everyone was getting pretty solid pay packages kind of regardless. And now it's going back to more based on what your individual people, that's what he wants it to be. Right?
Although even the fact that they have continued to call this level of executive partners is a vestigial thing, right? They're 20 years since it's been a partnership, purely speaking. So in a sense, they were trying to maintain this sense for a long time.
Yeah, and partner, but that still applies at some of the other investment banks that are listed too. You go up from associate or analyst to associate to director, managing director.
Or senior managing director at another firm is the equivalent of partner. The fact that they called it.
Exactly, it's still just a title. I mean, in fact, they still have one or two titles above that as well when you become a vice chairman and then a president, which very few people have. But the point being is this comes at the moment with a guaranteed base salary, $1 million, and almost a sort of right that you're going to get at least that in a bonus. If you've got zeroed bonus as a partner, it's almost akin to saying, we're going to fire you. Now,
it's a sign your time is running.
So if you're cutting the number of people that are in that bracket that essentially get at least $2 million, it gives you the flexibility to pay someone that doesn't even have the partner title, but has a blowout trading year or blowout investment year. We'll give you $5 million this year, but it doesn't mean you're going to get it next year unless you perform well.
When I think of David Solomon, he's also, implemented a number of other sort of culture changes within Goldman Sachs, and diversity has played a really big role in what he's been doing. Do you have any sense of the breakdown of female partners? Because I know it's one of his priorities to walk the walk on this issue.
I don't have those numbers to hand, but I'm really glad you raised that, because I do think there are two different sort of messages here that are coming out, and they're not mutually exclusive when you think them through, although on the surface some people might think they are. Absolutely, as you say, David has been really forward-thinking. He's saying we're young, we're equal, we're a modern place. In fact, that is all happening. I'm not saying it's not, but going back to the classic you eat what you kill business model can also happen at the same time. And I think on the outside, it looks like David Solomon isn't moving in that direction, but he is a classic Bear Stearns guy originally, which was, as I said at the top, the ultimate place where it doesn't even matter if the firm's doing badly. If you killed it, you'll get paid. And I think he wants to bring that back, which had got lost a little bit after you'd had a leader for over a decade.
That's how David looks at his bookings. Eat what you kill.
Damn right.
Watch out.
Yeah. All right, well, thanks. Talk to you soon. Let's
See you
turn
later.
on over to John Fort with a look at what's coming up on Squawk Alley. Hey, John.
We can all get a good laugh out of that David Faber reference there. But yeah, the major indices all higher by about 1.5%, but not everybody doing well. Two companies, two recent joiners to the public markets, but two earnings reports, and boy, Livongo is down better than 20%. Slack is down about 11%. We're going to talk about both. We got the CEO of Livongo coming up on Squawk Alley.
At Fidelity, we believe your money should...
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
LinkedIn Learning offers more than 14,000 online courses to help you achieve your goals. Its short video tutorials cover business, technology, and creative skills employers look for at every level, all taught by real-world industry experts. And new courses are added every week. Plus, LinkedIn Learning is personalized, recommending courses based on your interests and skills. Start your free trial at linkedinlearning.com. Cancel within the first month to avoid any charges.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get 5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees and carrier charges apply.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Welcome back to Squawk on the Street. I'm Dominic Chu. Stocks are hovering right near their best levels of the morning so far, boosted by optimism on U.S.-China trade talks. As you can see behind me, financials and technology sectors are leading the way higher. But take a look at this. Let's scroll down on one of the notable underperforming groups, and you can see behind me here in the red, and that's the utility sector, dragged down by names like Edison International, also NextEra Energy, and American Waterworks as well. That sector has rallied nearly 5% just in the month of August alone as investors searched for yield amid all that heightened uncertainty in the markets. But that incremental optimism today is pushing investors away from that safety trade. You can see gold prices as well taking a notable leg lower, off by more than 2% and on pace for its worst day since June of last year. Keep an eye on the safety trade and gold and silver. Now I will send it back downtown to you guys at the stock exchange, Mike.
Dom, thank you very much. Looking here at the S&P 500, up 41 points, like 1.5% at 29.79. The index closed July 31st at 29.80. So August was just kind of a nervous bad dream, and we had this kind of ugly shakeout, a collapse in bond yields. The 10-year Treasury yield closed on July 31st at 2%, 2.02. So that shows you how much bond yields came down. Stock markets made a round trip. It shows you there's probably room for this tension release to happen more, because that safety trade, as Dom said, is kind of bleeding away, at least for the day.
Though we are seeing yields higher across the board
Exactly.
today. 10-year yield of 158, a whopping 158, right? And the German 30-year boom goes positive.
Yeah.
I mean, there are signs that
we're relaxing. There was a little bit of an over-anticipation of a bad near-term economic outcome, and not seeing the evidence of it domestically. And it seems as if positioning, people were almost not prepared for a little bit of better news, and that's why you're seeing this rush to riskier stocks today.
Yeah, ADP this morning, 195,000 private sector jobs added in August. Tomorrow, of course, we'll get the jobs report. But before then, Sarah, we're also going to have a closing bell today. See if we can finish off this rally.
absolutely up 440 on the Dow. We've also got two big CEOs coming up in closing bell today. We are going to talk to the CEO of Box, Aaron Levy. He's going to discuss Starboard's new stake in that company, and also some new cybersecurity news that he wanted to go over. We've also got the CEO of Kimberly-Clark, Michael Su, to talk about the state of the American consumer, any trade war impacts on his business, and the fact that these consumer staple stocks like his have been trading at new highs. He's a new CEO. He's gotten the benefit of the doubt in the market. He's engineered a nice turnaround in terms of cost cuts and some top-line growth. But he's got a big rival, P&G, hot on his heels, that is growing at the fastest they've grown in years. So I'll see you at 3. A lot of good company stories for you.
Great. All right. When we come back right here, of course, we'll have more on today's rally. Squawk Alley's up next. Don't go anywhere.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did someone say winter sun? It's that time again, and this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA net or protected, subject to availability and conditions.
Good morning. It is 8 a.m. at Slack headquarters in San Francisco, 11 a.m. here on Wall Street. Squawk Alley is live. Welcome to Squawk Alley. I'm John Ford with Morgan Brennan, David Faber here at Post 9 at the New York Stock Exchange. Carl is on assignment, and we're going to begin with today's rally. Stocks surging. All of the major indices up more than 1%. Our Dom Chu is back at headquarters with a look at what is driving the gains today. Dom.
So, John, I mean, we are right near the highs of the session right now. The Dow is just up about 458 points, 452 at this stage. And as you can see here, almost 1.5% to 2% gains at this stage for the major indices. The S&P 500, really the laggard there. A lot of technology and communication services stocks powering that NASDAQ composite to a 1.8% gain overall. With regard to what's driving the action, take a look at the sectors that are the most at work and at play here. A lot of green on the screen with regard to cyclical, more economically sensitive parts of the market. That is financials, that is industrials, that is technology. Meanwhile, consumer staples, real estate and utilities really lagging behind. The key level that we wanted to watch earlier on was 29.45. That had been an area of resistance or slowdown in the market for the S&P over the last month, and we now remain just about 1.5% away from record highs. Turning now to the Dow. There are 4 stocks in particular that have been a big focus over the last couple of days because they've been driving a lot of the action there. Take a look at these, because Boeing right now up almost 2%, Goldman Sachs 3% gains, 3M almost 4% at this point, and Caterpillar 4% gains as well. These four stocks have been some of the biggest point contributors and detractors as of late. Right now, in this 450-point rally, John, these four stocks account for about 170 of those points just on their own. So trade-related stocks, also financials, a huge focus. That's what's driving the action, John. I'll send things back over to you.
All right, thanks, Don. That's the good news. But now let's turn to Slack. It is down big this morning after forecasting larger than expected loss for the current quarter. Slack CEO Stuart Butterfield joined Squawk Box earlier on today's drop. Take a listen.
Investors are going to make decisions over the long run. This is a very strong quarter. But whether it's up or down, yesterday up 8%, and the regular market down after, it's not going to make a whole bunch of difference to the long-term holders or to the business. This was strong quarter, 145 million revenue versus 92 million the year prior, and we're happy with that.
They're happy with that. Henry Blodgett of Business Insider joins us now, along with former Twitter COO Ali Ragani, now at Y Combinator. He's in San Francisco. Guys, good morning to both of you. Henry, I mean, if you look at the numbers, I mean, there is actually a lot to be happy about in Slack's results.
Absolutely. This is just volatility around the market, getting used to expectations versus reality. The company seems robustly healthy. The only possible concern is more competition with Microsoft, but there are likely to be two of these going forward. And it's just hard to overstate how much companies are now being built around Slack as a communications tool. It has taken over our company completely. We still use email, didn't replace it, but it's changed how email is used. Everybody is on Slack. Our bill for Slack is going to go up for years.
Ali, calibrate this for us, because you were at Pixar, which is a challenger, certainly in the animation business, at Twitter, which is a challenger in social media. Slack here is trying to challenge the enterprise establishment in productivity. Do you sort of give them a mulligan on this quarter, first time out of the gate, or how do you read this?
Yeah, I think the market is recalibrating on growth expectations for the future. I think Henry's right. This is a fundamental company, an important company, but it not only faces competition from the top, from Microsoft, but it also faces competition from the bottom, from numerous open source alternatives to Slack that are coming up through IT organizations that are offering products that are cheaper, more flexible, and more secure. And if you read Gartner, Gartner will talk about a bunch of alternatives, open source alternatives to the Slack product. So I think it's a very big space. Slack is very well positioned, but I think it's likely that there are not going to be just two winners. It's likely going to be more than two big companies in the sort of enterprise collaboration and communication space going forward. And I think the market is seeing that, and some of their projections on growth are reflective of the competitive environment that they live in.
Henry, how do you think about that? I mean, using the Business Insider example, how sticky would the company be to Slack if more competition and better prices came in?
Look, open source can be cheaper, but then you have to talk about the number of engineers that you need to do that. You have to think about, can this be adopted outside the organization? One of the things Slack wants to do going forward is start bridging between companies, where you get your customers on Slack in your channels going straight to your folks. That's much harder to do with open source because you need somebody to coordinate it. And I'd say, engaging with any company, buying something or building it, you want to be able to call up somebody and yell at them if it's not working. You want to be able to hold somebody responsible if something goes wrong. That's much harder to do with open source, unless you're building it yourself. But again, then you got to get everybody else on it too if you want the collaboration. So I do think there's a lot of value for a platform like this that is ultimately going to cross a lot of companies. I think a lot of companies will say, look, we want to have a central party to hold responsible.
Yeah, these network effects that Butterfield was talking about on the call, where you can get people outside your organization on a Slack channel, it seems like that has huge potential. Let's move on, though, to WeWork. Our own David Faber reporting this morning that the company is targeting a lower valuation than expected ahead of its IPO. And this has just been savaged, this company, after its S1 came out, which, had all kinds of flowery language about what kind of company they are, but also some concerns just about how the business model to the extent that you can call it that, is going to work.
Yeah, absolutely. If David put it that the companies may have a lower valuation, that's incredibly polite. This is the market just flat out rejecting what it was brought, the S1 that was brought, basically saying, try again. This is ridiculous. And so they will now go and come out with a totally new valuation. They've already changed some of the things that had yellow flags or red flags, like this $6 million purchase of the word "we" from the CEO. That's now gone. So basically,
they even added a woman.
Exactly. So we're going to try again and bring it back. And to me, this is actually a good sign. Like, investors are showing a lot of discipline. 6 months ago, it was basically an IPO, place the order. Now it is, we're going to look at it closely. We're going to really think about the valuation. And if we don't like it, we're going to say no.
We should bring people up to date on what it is that we're actually reporting. Remember, the last round for this company was done at $47 billion. Of course, SoftBank is its largest single investor by far at roughly $10 billion at various stages along the way, but certainly far higher than what I'm hearing is a level at which there's still not a great deal of demand, which is $25 billion. So there is a question as to whether you're going to get down perhaps as low as $20 billion. Would that be possible? And then you do have to wonder with SoftBank's view of it as to whether that's something they could even want to stomach.
Especially given Uber, right?
Yes, with Uber and potentially at least paper losses on there, given where they've been. Or can you find some sort of significant investor to come in at a level to sort of help give confidence in the marketplace? That's certainly something else that we should keep in mind as a possibility here. As the underwriters and the companies sort of search for what the right place is for a company that is growing revenue very quickly, but growing losses also almost equally to what the revenue number is.
And I think what you're seeing with Uber, we learned from that, Lyft too, is these private investors are buying preferred stock. They have downside protection. No matter what happens to the valuation, the worst they can do, unless the company really goes bust, is get what they put in back. It's not that way in the public market where you're buying common stock. You can immediately lose half your investment overnight if things go south. So here the market is saying that. It's like we're not going to pay the same valuation you paid with your downside protection.
Ali, to that point, I mean, you could call this the ultra bear, I guess, case for WeWork as it gets ready to go public here. But when someone like Sam Zell, longtime real estate investor, one of the pioneers of REITs, comes on CNBC and says that he's seen this type of business model before for decades now, and that there's never been a case where a company like this has actually not gone bankrupt. I mean, you think what? Is there a sustainable long-term business model here, especially in a recession?
Yeah, it's funny, when you mentioned Sam Zell, I mean, there's an open question as to whether WeWork should be considered a technology company at all. I mean, certainly they do some interesting things in terms of using technology to enhance their environment and workplace environment and product offering, but fundamentally it's a real estate company, and I do think we've seen models like this before. So, I think, Sam may have a point, but I want to underscore one thing Henry said, which is public market investors are valuing businesses. I think this is good news because the public market is valuing businesses based on fundamentals. And the private markets sometimes get ahead of themselves in terms of real fundamental analysis of the business. And if fundamental analysis of this business indicates that it's worth less than the last private market investor paid, so be it. I think that's good news, and that kind of discipline is actually a positive, not a negative.
Henry, is there something going on here with valuations around names that have recently gone public? Can't help but think about Uber trading way below its IPO price. We were just talking about Livongo, which is down 22% this morning in its first report after going public. Slack, we were just talking about. Now, I mean, shaving some losses, but down about 7%. Does there need to be some kind of recalibration in how investors are thinking about younger companies?
I think you're seeing the recalibration. To Ali's point, too. 6 months ago, you just said, an IPO? Buy. I'll take as much as you can give me. I'm guaranteed to make money. And then Uber came along and others, and we've seen, no, it actually really matters what price you buy it at. And that's what we're seeing. And that's what we're seeing with WeWork. And by the way, I don't mean to say it, if they come public at $20 billion, that is still an enormous valuation with enormous downside if things go wrong. So it's not so if we find a market at $20 billion, they're still doing great. And
Beyond
it's the same for Uber.
Beyond Meat's still worth more than $10 billion, though. So just let's not. Okay, let's turn to Twitter. Disabling its text-to-tweet feature after several high-profile hacks this week, including arguably the highest profile of all, its founder and CEO, co-founder Jack Dorsey. The stock is still up more than 2% today. Ali, you used to work there. Is this sort of a nightmare-ish scenario for? I mean, the investors don't seem to be taking it too hard, but Jack Dorsey's account getting hacked, and then more accounts after that. That's not good.
Yeah, look, I think account security is very, very important. And this is, I think, more embarrassing for Twitter than, indicates some sort of breakdown in their business or, a reason to short the stock. I was there when we bought a company called CloudHopper, which enabled people to tweet directly from SMS. That's legacy behavior. It's not what people, by and large do anymore. Perhaps in certain pockets of the third world it's still relevant. But it's a sort of, as has been proven, it's a hacking vector through this sort of SIM swapping, practice. So it's ironically not really Twitter's fault that Jack's account got hacked. It wasn't a breakdown on their part. But sort of closing or disabling the tweet by SMS function should cure it. And we'll see if they re-enable that or if it's closed down forever. But it's more embarrassing, I think, than really damaging to the company's long-term prospects.
Ali, it definitely raises a key question. I mean, we do so many things on our smartphones now. Everybody and everything is shifting to mobile. And I think many folks out there, many consumers, and probably many companies don't even realize that wireless carriers have a role to play in all of this security as well. What do you think that, I guess, what do you think those safeguards look like as applications through our smartphones continue to evolve?
Oh, I think it's a real issue. I mean, I think that if there are humans involved in the chain to guarantee security and those humans are all fallible and any single person is, can create a problem through a bribe or through some other form of coercion, I think there's vulnerabilities. And so I think companies can try to design their systems in such a way that they have as little reliance on external parties as possible, but it's not always possible. So in this case, it sounds like from the reporting that it was somewhere in the mobile operator chain that this kind of vulnerability was exposed and Jack's account was hacked. And as I said, it's not really Twitter's fault. Except that, they have this tweet via SMS function that enabled the tweets to be sent. So I think it's always going to be a constant battle between hackers and security people. It's never really going to go away. It's part of just, the digital world that we live in. And so this issue is here to stay.
Yeah. Leaving the back door unlocked is kind of your fault, though. I don't know if I'd let them off the hook. Ali, Henry, thank you.
Great to be here. Thanks.
Thank you, guys. Bye.
After the break, the corporate bond bonanza. Apple leading a host of other U.S. companies and issuing bonds at record low yields this week. What it means for the stock and you. Next. Meantime, stocks are surging, largely in the green this morning as the Dow has its biggest gain since June. We've got more on today's rally coming up. Dow's up 454 points. Back in 2.
It was Sophie's big day. Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent.
And then a big deposit. With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
What's better than being at one with nature? How about being at two with nature? Get a 2-for-1 companion voucher valid for 2 years when you spend £10,000 each year on the British Airways American Express Premium Plus card. Probably best not to go for the silent retreat then. Search BA Amex to find out more. Representative 76% APR variable. Annual fee applies. Applicants must be 18 years or older. Subject to approval. Terms, taxes, fees and carrier charges apply.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Strength and things.